This would be a video you'll want to share with your friends. Name's D7, been trading in live markets using technical analysis for 25 years. Let's get after it. The sector rotation image that you see here, this one is something that I want you to pay special attention to. Expansion, when the markets get bullish, the financials start to get bullish, the technicals get bullish, industrials, materials at the top of a market get really bullish. Energy gets red hot right before a market correction, and what gets really weak at that point? Financials, technicals, okay? So energy and technicals are separate from each other. And anytime energy gets really, really hot, the markets drop. We have seen that several times in the past. All these market recessions, if you've been trading anytime at all, you'll know that this is factual. A good place to look at this is free of charge. You go to finviz.com and then click on groups. When you do that, let's go back to 3 months. If you look at 3 months, energy is red hot. So the question is, where are the technicals? They're way down here. You can see the technicals down here at the bottom. 1 month, energy is the only thing in the green. Technicals down here near the bottom three. For the week, energy is the only thing in the green. Technicals were number 2. So for the 1 day, this is just Friday. Technicals got, this is Friday. Technicals got, did well. Energy did very poorly. I don't care about the 1 day. You have the ebb and flows there. What I care about is the 3 month. What are we seeing? The 1 month, what are we seeing? And are we seeing it in the week? The answer is yes. Energy is red hot. The reason I bring that up is because I showed you guys last week, and thank you for all the new subscribers. Got a ton of you guys coming in. We're over 12,000 in subscribers now. But if you look at the VIX monthly chart, now the month's over, the VIX is up right now 29% for the month. So that means fear has increased by nearly 30% from the previous month. If I go to the spiders are down for the month 5%. The NASDAQ techs are down more than 5%. Russell's 2000 down 6%. Financials down 3.5%. If you look at gold is down 4.8%. Silver is down 9% for the month. So that is for the month. The month is closed out. We're going into October right now. And that's of importance to me. The other thing I want to share with you is this. You're looking at the US 10, this is the US 10-year bond versus the 2-year bond. And you might have heard about the yield, the inversion in the yield, right? The bond yield inversion. It has a great history of predicting recessions. It's 100% at this moment. What we're looking at here is this is the market going up, and we're making what looks to be an M for murder, okay? So it's not even quite a double top, it's weaker than that, and that's what we have going on right now. What you're looking at down here is the average, the average, if you will, calculation between the 10-year and the 2-year bond. So if you're buying a 10-year bond, it should pay more yield or more profits. If you're buying a 2-year, it should pay you less. Every once in a while, the 2-year will pay you more than what the 10-year will pay you, which is called an inversion. Now, anytime you see a dip that goes underneath this red horizontal line, you have an inversion. And after that inversion, you'll see these drops. Now, you'll see these perpendicular lines, vertical lines rather, going up. And these lines they show when the inversion corrects itself, when it's once inverted and then it's no longer inverted. I put a line, and then you'll see a big crash take place and a huge crash. And here we got a few of them, a little crash and a monster crash. Here we got one right, I don't know what the correlation is, but we got one of these just before the Corona crash. So right before Corona crash in 2020, we we saw an inversion that happened just ever so slightly, and then that happened. We're in an inversion now. You can see it. We're below the red line, and it has been the deepest inversion we have had in history and has lasted the longest in history. And it looks like it's starting to go up now. At this point, it's starting to go up, and once it corrects itself, we should be looking for, and I'll put another red line here, and then we should get a big drop. Okay, that's what we're seeing here. This, just to put this in perspective, this is the technology bubble pop. This is the Great Recession in 2008. That's the Corona. This is 2022. And then this is going into 2023 and 2024. Once this comes up, it's going to be a brutal market. We're set up for that. All right. Now, if we look at the spiders, this is the spider monthly chart. This is now no longer dynamic moving candle. It's a static moving candle. So we have a lower high, lower low. We had that before, and I said that's our pivot candle. Now we have a defined down leg. Because we have a defined down leg, I'm able to plot a new trend line. So this new trend line will go from here to here, and now I'm making a symmetrical triangle. Okay, now the problem is we're dealing with sector rotation. Sector rotation, we have energy red hot going into a recessionary cycle. And if you haven't yet watched last week's video, I highly recommend watching that and then coming back to this video. But now we have this down leg, and the question is this down leg going to come down and keep crashing lower, making a new low, meaning that we'll go lower than 2020? I think we have a really good chance of that happening. I think we'll go down, test these areas, break through these areas, come down and break through this areas, heading down to this support line. And the question is, will this support line hold? That will be the big question. But put this in mind: if we crash that low, guys, that's gonna be blood in the streets, and it's gonna feel really, really tough in the markets. The NASDAQ, if you look at this, same thing. We had a pivot candle, and now lower high, lower low. This is a defined. This is a defined swing now. We have an up leg and a down leg. And if you look here at the Russell's 2000, bear flag, we're down. There's the bear flag. You can see the bear flag. With this, we actually closed below that trend line, guys. Bad news, but we have this blue trend line coming down. It's easier to see this way. Down, 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 bull flag. We closed below that, but we still have this area that was resistance, 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 and now the resistance should be support. It broke this trend line, this red one. That tells me that we have a good chance of just breaking down. The question is, will that trend line hold? And we're holding our breath to see if that happens. Financials is in a huge symmetrical triangle, and it is pinched. It's in the apex right now, and this is going to make a big move one direction or the other. This is something to pay a lot of attention to. Huge attention to the financials monthly chart. Okay, now moving on, we're going to take a quick look here at the weeklies. The weeklies are now obviously over. And this is the spider weekly at major support. So down, 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 down. We're at major support, kind of a hammer type formation. It tells us we could bounce here. We could bounce. We got to look for that NASDAQ. If you go here, we have a spinning top at a support line. We could bounce there. Let's see if that happens. Russell's 2000 broke the trend line last week. We could not get back above it this week, guys. So that's telling me that we have relative weakness here, that this is going to have a hard time getting back above. However, if we do next week close and we close back above this line, this will be right here a bullish death hook, and it could get really bullish and fast. Speaking of death hooks, look it up on the internet. Google death hooks, technical analysis charts, or charting death hooks, or bullish or bearish death hooks. Do that and you'll see some information on death hooks. We're going to be doing a class on this. I'm going to charge $19. No details on it yet. I'm going to let everybody, I'm making it where anybody can afford it to come in. I'm going to teach how to profit from these death hooks. But that's something that we're watching right there on this weekly chart. Financials weekly chart. Financials weekly chart. If you look here, major support. Will we bounce right there? We could. If you look, well, before let's go to the US dollar, has been up, and now we have, anybody in the comments tell me what type of reversal pattern this is right here at the top of the US dollar weekly chart? What is that? Let me know in the comments below. We're very, very extended there. I'm not even showing the indicators and oscillators. I'm just going straight price action with these. Gold weekly chart had a monster drop, guys. Just the US dollar being so strong caused this on huge volume to drop. Silver, very unexpected. Remember how we were talking about these support lines, we bounced, but we broke down below them. That's no bueno, no good. And the question is, if the US dollar starts crashing back down, will gold and silver rally back up? Yes, it should. We'll see. VIX for the week went up 2%, but it did break this trend line last week, and now it broke this trend line this week, guys. You can see it here. We got up above it. That's fear. Fear is broken trend lines here. And just a quick look at the dailies. And I'm making this a quick video for everybody so it's easy to consume, okay? But if you look at the VIX daily chart, look at this. This is a daily chart. We come down, down, down. We hammer out at a support line. It's getting ready to rally back up. It's what it looks like technically, right? Spiders, if you look at this. What was interesting is we dropped. This was last Monday, and sure enough, we got a gap down and run up. It was a good place for buyers to come in, but as I suspected, the smart money came in and sold into that strength, and then we go down to this major area of support, this big trend line on the daily chart, and we hammer out. And when we hammered out, buyers came in right here, and then on Friday, we gapped way up right at an area of resistance. Right there, we gapped up, and then smart money sold into that. And by the end of the day, we rallied back up a little bit. It is no man's land. And you look at the chop here, guys. It has been so volatile, so choppy. It has been throwing the markets into a tizzy. And if you look here at the NASDAQ Q's daily chart, same thing. We went down below some support areas. We're just doing these, what looks to be bear pullbacks at the falling and moving averages. Not good. Russell's 2000, down, down, down. Came up to a trend line and moving averages, and we found sellers, and it's heading back down. Financials down, down, down at major support, and then for the day we actually closed. We should have bounced off of that line, and we tried to bounce off of it, but we gapped up on Friday and come back down and closed below it. That is no good on huge volume. That is no good. US dollar came up, and then now is breaking down. US dollar now hammers out. A lot of volatility on the US dollar Thursday and Friday. Gold daily, just huge drop on gold. Down 1% on Friday, 2% on silver on Friday. Look at this nastiness. So we're down. We had this gap down. We had this what we called we had this abandoned baby reversal pattern. Sure enough, we went higher, 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 higher. But then we come crashing back down, and what a mess. We're at major support though. That's the hope. Huge volume, major support, huge volume, guys. Major support there. So something to be watching. Now, quick look, and I'm going to end with this. Quick look at a couple key technical stocks. So if I go here to Grok Tech Stocks, Apple is a big one everybody cares about. Symmetrical triangle, it broke down. Support now is resistance. It dropped. Bear pullback. It drops. Kind of gives us a hammer. Starts to pop. It is bleeding southbound. It is no good. Amazon, if you look at this, down, down, down. It's trying to find support and a bounce here. That we're moving averages are going down. This could just start bleeding southbound. Okay. If you look at ARC, it's just a bear pullback. Lower swing lows. Lower swing in a bear pullback. Good shorting opportunities potentially. And a quick look, like we'll go to Meta, Facebook. It's chopping around doing a whole lot of nothing. Microsoft is just lower swing highs, lower swing lows, below moving averages, not good. Netflix, if you look at this, down, 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 major support, trying to bounce, but it looks like it's going to drop again. But it's at a major retracement to the downside. It's begging to rally. Needs to do it. NVIDIA. If you look at this, Down, 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 big rally, but now we got selling going into a major trend line. This is a bear pullback with sell signals everywhere. Roku, look at this, up 3.7%. We had a doji and then boom to the upside. Can this get legs and rally? It could. Shopify, if you look at this, down, 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 dojied, gap down, run up, boom, pop, shooting star. Snap was up 4% down here, and then boom, above moving averages. Can it keep going on good volume? And then Tesla up 1.5%, down, 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 hammers out at a support level and bounced higher, but we doji out at the falling moving averages. And there you have it. It doesn't cost you anything to give me a thumbs up. Just give me a thumbs up. Doesn't cost you a thing. It's easy to do. I hope you appreciate this video. I appreciate each and every one of you. We do technical analysis each week. We've been trading in the live markets multiple decades using technical analysis. If this was beneficial to you and you like what we do, it might be worth subscribing. It's up to you if you want more of this information going into the future. And subscribe, and you don't like it later, unsubscribe. No problemo. So anyway, take care, everybody. Much success to you going into these markets. It is troubling times. And yes, we do mentor. We only set 3 days aside each month, okay? We're doing our own trading, but 3 days a month. If you want us to train you, just go to Grok Trade, look for mentoring. Happy to help you guys out. Take care. We'll see you guys later. Bye. Guys, why are you still here? You're supposed to be gone while I still have you. If you haven't joined the 301 mentorship yet, seriously give that some serious thought. Mark the Meerkat's been trading a long time in the markets. As you know, I have too. We take people under our wing and we teach you what we do to trade in the live markets. We trade a significant amount of money on a day-to-day basis in the live markets ourselves. If you're going to learn from anybody, learn from us. It's the 301 mentorship program. We've been doing this a long time, and we're happy to help you. There you have it. Now, get out of here.